I decided to sell my Starbucks shares, and I'd like to share the reasons why I decided to exit out of this really good quality company. Over the last year, there's certainly been a lot of news around Starbucks. The CEO that was replaced was really getting a lot of bad press, and the stock was really suffering. In general, I think Starbucks is a high quality business, very desirable company. And when I saw the stock price really drop in the late April, early May timeframe, it was a really nice opportunity to pick up one of the best brands in American culture. And it proved to be, in the near term, a very good idea. It really rallied when a new CEO was announced and the stock's really up. Geez, last month and a half, it's up 27%. And it really began to be priced above the fair value that I have for the company. So I decided to get out of this position. We're in a very good, prosperous stock market. I don't expect it's going to last forever. I think we're going to have a pullback at some point. And I'm really looking for a few stocks where I could sell them and increase my cash position. And Starbucks is somewhat of the next stock that's on that list. So I sold a third of my shares today, which was basically 80 shares. I'll be selling the remaining 160 shares over the next couple of weeks on up days. The stock is enjoying a good day today. It's up almost 1.5%. Let me take you through my analysis of Starbucks, share with you what I'm seeing, and what supports my decision to exit this stock. Now, I'm going to get out of Starbucks, but I'm going to put it on my watch list. I don't have to pay anything to watch a company. And I most definitely will get back into the stock if the story changes. I expect that 2025 is going to be an interesting year for the company. We have a new CEO that's coming into the company, and I imagine it's going to change a few things. And those changes are probably going to need a quarter or two to begin to work. It might lead to additional capital investment. It may lead to lower sales in the near term, lower profits, lower cash flows. And I think the market may not like that in 2025. So I'm just thinking ahead. I could take a gain, a pretty good one that has taken less than 5 months to really gain, and just cash it out. Just cash it out, sit on the sidelines on this stock for maybe a couple of quarters to see what's going on with the new CEO and the changes he's going to make on Starbucks. Let me show you a little more. I like looking at Stock Analysis, the website. It's got really good information. And on that website for Starbucks, it shows that 22 analysts cover this stock. It's a good number of analysts. And they all agree it's a good company and it's discounted just slightly by 4%. So it's fairly priced in my book. Now, my analysis reveals that the stock price is a little different, but in this neighborhood. Let me show you that. I calculate that the fair price for the stock is $90.27. And that's based on my valuation that is predominantly on free cash flows that I expect Starbucks is going to produce, and then looking at earnings per share. Free cash flow valuation is 67% of the value and 33% being earnings per share. And again, you could say it's fairly priced because I'm calculating that it's being sold at a premium of 4%. Analysts that predominantly look at earnings per share are thinking it's 4% priced at a discount. So we're in the same neighborhood. So I don't think any of us are far off the mark. Now, again, I come back to where do I think the business is going to go in 2025? And I think it'd be unrealistic to think that a new CEO is going to land and not change a few things. And Starbucks is a very known business. We know how they operate. We know how they make money. So I think we probably will see some short-term pullbacks, maybe a drawdown, because the changes the new CEO makes, we need to see if they're going to work. So that's my story of 2025 for Starbucks. So the stock is fairly valued. I think it's a little overpriced. It's really run up fast since the new CEO took over. So I'm probably feeling more comfortable if I just cash out the position versus sitting on the stock and potentially seeing it go down 10, 15% from this point. An additional data point is Meta AI. Meta AI is one of the AI apps that I'm really depending on these days. It really does provide good, accurate data. And I asked, hey, Meta, what's the fair value of Starbucks stock? And it gave me a fair value of $89.81, pretty close to the number that I got. So that's pretty neat. And they base it on Peter Lynch's fair value formula, which is pretty interesting. So they came in at a price that was about the same as mine, and they're referencing one of the super investors that I have read his books. I really believe in his techniques. So there's one more data point that, hey, the company is fairly priced. And again, my reason for selling is I think 2025 is going to be a little rough here or there with a new CEO. I think Starbucks is a very desirable business. And I usually don't buy into restaurants, but Starbucks is probably an exception because they're mostly a premium coffee restaurant. They also have a strong consumer packaged goods business where you can buy Starbucks coffee in your grocery store and in different places. So, in general, most restaurants I would put between the red and the gray, but Starbucks is an exception. I actually put them between the green and the gray, meaning a good part of their business has great competitive advantages when you compare it to its rivals. First, it's the biggest. It has a very strong network effect. It has a great brand. They charge very good margins on their coffee. All those things apply and put them in the green. At the same time, they're partially in the gray because they have to hire a lot of employees. It costs a lot of money to have all these locations. These are premium locations where the lease space is pretty pricey. So the cost of doing business is a little higher. It's certainly not as lucrative as a Meta, an Alphabet, Google Alphabet, or a Microsoft. So I can't put them cleanly in the green because they're just not as profitable as those types of industries and businesses. But they do have a strong business. They do have a nice, strong moat. So I put them in a desirable spot on my overall scoring of how desirable a business is. My investment in Starbucks stock started at the very end of April, very beginning of May. And to this point, on the shares that I've purchased, I've made 25%. And that's less than 5 months, probably average in. It's like a 2-3 month, average that I've owned the shares. So it's been a very good gain on this stock in a short period of time. Sometimes it's better to be lucky than good. The switch of the CEO really unleashed a lot of perceived value in the stock, and investors really like the move of the new CEO. They certainly did a great job of picking a solid CEO that's coming over from Chipotle after successfully guiding that company to a very good operational level as well as a very good price level. So good job, Starbucks board, for hiring a great CEO. But I think cashing in this gain is going to be a good idea. And I'm going to cash it in by selling my stock in 3 different trades. I just sold 80 shares, a third of this particular value. And I'm going to sell on 2 more trades, picking up days over the next couple of weeks. I'm trying to learn from my colleagues in our community. I used to just sell in one move. Okay, I've made a decision on Starbucks. I'll sell all the shares. But really good feedback, positive feedback saying, if you dollar cost average on the way in, why wouldn't you dollar cost average on the way out? So I'm trying to improve and get better. And I'm going to dollar cost average on the way out as well. In bigger trades, I didn't buy a third of the shares at once and a third and a third. I bought more over time, but I think I'm going in the right direction on dollar cost averaging my exit of Starbucks stock. So that's my video on Starbucks. I'll end by saying that it is a quality business. I'm not expecting Starbucks is going to have a big bad, 2025. I just think it's really run up quickly. I'd like to ring the cash register because the context of where I'm at with my portfolio, the first 9 months of the year have been excellent in 2024. I'm sitting on very good gains, and I'd like to lock in some of those gains, protect them, and really record an excellent appreciating year for 2024 like I had in 2023. So it's time to cut back here or there and get into more cash. The great Warren Buffett and Berkshire Hathaway have been increasing their cash position significantly. It's just one more data point that leads me to think that being in cash isn't a bad idea. Most of my investments are in stocks or bonds or real estate, most of my wealth. So I do have a cash position, but it's not a big cash position. It's probably 12 to 14% of my equity and bond portfolio at this point. And it'll probably always remain around that ratio, probably a little less at times and a little bit more at times. So that's my video on Starbucks. I hope you found it interesting, and I encourage you to provide feedback on it. Let me know what you think. I also encourage you to become a paid member of our community. We are really doing a lot on Discord, really sharing a lot of knowledge, a lot of experience, and hopefully ideas for investors to become better and better at making money and growing their wealth and growing their portfolios over time. You can get those details on the description of the video, and I'd really appreciate it if you become a paid member. Thank you very much for watching, and good luck investing for the remainder of 2024.